The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey traders, what's up? What's going on? Hope you've been having an awesome week. I've got an interesting guest lined up on the show for us today, and he takes a slightly longer term approach compared to many of the guests I've had on in the past, but I think it's great to mix things up. He's a young guy, he's doing big things, and he's got a great story to tell. So let me give you the 1,000-foot view of where he's come from and where he's going. So Michael Melissinos started a job on Wall Street about 6 months before the '08 crash came through. So he was right there in the thick of it. He was actually an analyst on the trading desk at Bear Stearns and then later at JP Morgan after they were brought out. I'm sure you're all familiar with that story. Since then, Michael's left his Wall Street days behind him and now trades a fund of his own, using a systematic trend-following approach that operates on 40 global futures markets. While I missed a large chunk of the story there, you'll hear how Michael got to this stage of his career during the interview, as well as a few of the lessons that shaped him into the trader he is today, including the advice he received from market wizard Ed Seykota. I also like Michael's thoughts around why you should consider playing a game that's larger than money, and the emphasis he places on preparation is really great also. Alright guys, you know the drill. I'm your host Aaron Fifield, this is Chat with Traders, and here is this week's guest, Michael Melissinos. Hey Michael, what's up man? Welcome to the podcast.
Hey, thank you for having me.
No trouble at all. Thanks a lot for putting aside some time this morning to come on and be open for an interview. It's really good to have you on.
Yeah, well, it's 6:07 a.m. here in New Jersey, so not a lot of people are up right now. I'm probably the only person up on my block, but yeah.
Nice. Is that how you roll every morning? Up nice and early?
Yeah, because I was actually dealing with this problem yesterday. Because I was telling you before off the podcast that we recently bought a beach house, my fiance and I, and we're doing a lot of work around the house, and we still have a lot of chores. And my fiance is type A go-getter. She wants it done. She doesn't want things lingering. She loves to-do lists, doing them ASAP, and she's got me doing chores all the time. And I'm like, I need to do work, because the day rolls on, and there's just more and more stuff to do. It gives her more time to think about more stuff to do. I'm like, oh my God. Putting her bike together, doing the fence, doing this, doing that.
Never enough hours in the day.
Never enough. So getting up early and, before she gets up, is good. So this is, we have our sanctuary right now, our time to talk about whatever we want.
Good stuff. Well, I'm glad you could fit this in. So we've definitely got plenty to talk about. So let's just get into it, and let's get this started by telling us about how you originally got involved in trading, and perhaps even further back than that, what were you doing before this time?
So I graduated from college in 2006, started work in early 2007, and I started in public accounting. And that's what I majored in college. So I wasn't entering the workforce with any kind of trading job or any kind of trading, experience or background of any kind. Didn't even intern with any banks or funds or anything like that. But a couple of my uncles went through Wall Street long time, still in it as well. And just coming from a sports background my entire life, I had always interested in just competing at something, getting good at something. And after a while in the accounting job, that wasn't really fulfilling that urge in me. So, I started reading just, in public accounting, you have your busy season. I'm sure everyone knows an accountant, they have a busy season. it starts to die down probably in June. At least for me it did. So from June through the summer and then into the early fall is when I really started to read a lot, especially on the commute back and forth from Jersey to New York. I was working in New York. So I had about like an hour commute every day on the train, so I would do a lot of reading then. And at work during the off months, I was reading a lot during the day. And it just became, I stumbled across, a lot of different blogs, a lot of different opinions, different this, different that. And the one that, stuck with me the most was this trend following style. And it kind of just made sense to me. And I was actually on Michael Covell's podcast maybe like a month or so ago. And I told him, when I read his first book, the trend following book, I think it was his first book that came out in 2005, and I read it in 2007. I said I slammed it shut at a few points in that book. I was like, there's just no way. Because he makes it sound so easy. He makes it sound like so simple. So this, and you know what? It is simple. At least the concepts are, and I think the concepts, parallel and have a lot in common with what happens in the natural world. Anyway, the ideas of diversification. Spread yourself out. Don't limit yourself to one type of. To profit from one market, and then buy and hold. Comparing it to buy and hold's case, don't limit yourself to profiting, to just making money one way. Be open to going short as well. Be open to staying out sometimes. And then the other ideas of when you have a good thing going, let it roll. You're sticking with it. If it doesn't work, protect yourself and get the hell out of there. So all those things were, made sense to me just in general. And then I was like, oh, okay, now I have something that maybe I can actually try to get better at. Cause now I know, a strategy to play with, and, before that, what was I going to become, like a day trader? That's like the only other strategy I knew of, or like a fundamental thing, and that didn't appeal to me either, because that just seemed like a whole lot of work with not a whole lot of certainty, and I saw a lot of people going that way for a long time and losing a lot of money, especially in the bear markets like of 2001, and I was in high school at the time, and then I guess before that, when the like a year or so before that, when like the bubble, the Nasdaq bubble was bursting, and then. So that didn't really spark anything in me. But this trend trading thing started to make some sense to me and start to get the juices flowing, so to speak. So I started running with that, and eventually had some, light bulbs go off. And then I started getting so bored being at the accounting job that I asked my friend who I grew up with, who was working at Bear Stearns at the time. I said, look, dude, get me in there. Come on. I gotta get off. I gotta get off the bench, so to speak. I gotta get in the game. And, I didn't think I was going to become a trend follower at Bear Stearns, but, this trend following idea is like, oh, maybe I could start a fund. That was like in the back of my head. And then when the opportunity for to work at Bear came along, I kind of put the trend following thing on hold. I was like, oh, okay, I'm going to become like a Wall Street guy, and then work on the trading desk one day, and hopefully soon, and then all will be good, and I won't have to worry about this other thing. It'll just be just something that passed the time, this trend following, thing. So yeah, I think when I went to Bear in October of 2007, I was working a lot, so I got up at 5:30 today. Back at that job, I was getting up at 4:30. I was in work at 5. So I was home at like 8 every day. So I didn't have time to read or do anything relative to any trend following strategy, construction, or anything like that to one day become a fund manager or anything. I was just doing my job because it took a lot of hours to do. So, yeah, and then I guess throughout the 6 months later after I started working at Bear, it collapsed. So that was a big eye-opening experience for me. And then the team I was on went over and started working for JP Morgan, just doing the same job at JP Morgan, and the hours were still insane, but the middle of the day wasn't as intense as it was. So I started reading again. And then I started getting more serious. But those two events, the bear collapse and the financial crisis, and they really opened my eyes. And, those people talk about aha moments. Those are two big aha moments that really put me on the path where I said, okay, I can't work anymore. I need to go and do my own thing. Because I thought this way, I was going to be, I thought I had it made pretty much going to Bear. It was a good company and everything, and good culture. And I thought, oh, okay, I'm just going to, just put my time here, and I'm going to be a big shot, trader on the desk one day, and all's going to be good until it goes down. I mean, the company goes down. I didn't get laid off or anything. The company disappeared. And that was just like, oh my God. And then half of Wall Street disappeared, several months later. So those were just, blessing in disguises for me. Because now I had the opportunity to actually do what I wanted to do, in the back of it. And at that point, it was just in the back of my head. But it was really a drive at that point because I saw it's not, my job and the Wall Street, vision of being a big shot or, it being like a good job just wasn't so anymore. The whole game was changed. Now it wasn't a safe thing. And now I saw that. So I saw a lot of my colleagues lose a ton of money, lose their jobs. And all the a lot of their retirement money, if it was in Bear stock or anything like this. And I said, look, this is not going to be me. And at the time I was 23, 24 years old. So I was still very young and stupid and impressionable, I guess. And that kind of woke me up and made me grow up pretty fast. So during the off months and, the transition period from Bear to JP, and then even working at JP, it was just less intense, than my first 6 months at Bear. After everything collapsed, and then the financial crisis hit, things just got less intense. People were kind of just shaken up, and I don't know, I won't say didn't work as hard. That's not true, but just kind of like dazed, like they just got punched and knocked out, and then they're like stumbling to get to their feet. So people were just, I don't know, the workload just died. So I was just spending a lot of time doing more reading and getting into phase 2 of taking the path to become a fund manager one day. And that's what I was doing through, Bear's collapse through, January 2009, and then eventually got laid off from JP Morgan. The team I was on got laid off, and then I went to phase 3, because I had no job at that point, and I was devoting all my time to getting into the Excel, getting into the X's and O's of creating a system, not just reading about the theory of it. So
yeah, no, that's really good. Thanks for really fleshing that out for us. But being so young, just having entered Wall Street, you were probably only, there for 6 months to a year before things started to unfold and the crash came through. Did it ever cross your mind that maybe you'd entered the wrong industry and this wasn't gonna be?
Yeah, eventually, but not at first. At first, I was just so preoccupied with what was going on. I didn't really think at all. And it was only till after I got out of it that I started thinking that, and was starting to read, a lot of entrepreneurial blogs and books and other things that, watching a lot of videos of these up and coming like startup entrepreneurs, because at that point it was starting to, there was no real startup scene then, like there is now. Like now it's like booming, right? Silicon Valley's booming, and I guess maybe other less intense Silicon Valleys out there, maybe in Europe and other parts of the U.S. But it wasn't that big back then. But it was starting to come out of that bear market into what it is now, which is a booming bull. But I was just reading and getting some exposure to other entrepreneurs outside of Wall Street, and then reading more about the trend following trader types, reading and going on their sites, the funds that were around and that are still around, but then also getting to Ed Skoda's site, checking out his stuff. I entered one of Ed's trading tribes in New York, and just taking the next steps to get in the game, to get good enough to be able to play. At that point I was still just learning, but I was taking the next step from learning from the people that were doing it and hearing what they had to say. Because as an athlete, you want to learn from the guys that can actually play. You're not going to take hitting, in baseball, you're not going to take hitting lessons from, a guy who never played the game before, right? You take it from a guy who's done it with success for a long time. So that's what I started to do. I started to get some some FaceTime with the actual traders, and then other entrepreneurs in other industries, and then I started to believe that, okay, I'm starting to see the big shift here. Wall Street's not going to be the place to be for a long time, and maybe this is a blessing. And I probably had that thought, at some point during the winter of 2009 when I was, trying to look for jobs or something, and just in my apartment reading, and in New York, it's pretty gloomy during those months. So that was kind of maybe a bright spot in one of the dark, dreary winters of New York.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, Access has evolved. Now, so has the way traders operate within them. Trade the pool.
You briefly mentioned Ed, and you're referring to Ed Sakota, and I don't want to brush over that because he's a really big name. He plays the big games. So I'm curious to know, like, how did you actually get in contact with Ed? What was his tribe, his trading tribe, actually like, and what were some of the things that he actually really helped you with?
So he, before, Ed to me is a rare combination of very advanced technically and very advanced psychologically. He seems to understand both games pretty well. From being, him being an engineer, he's and engineers in general, they're very advanced, mathematically, science. They get that. That's their strong point, and they're not so strong with social skills and understanding behavioral dynamics, because let's face it, a lot of engineers, like even like accountants too, and maybe some other jobs, they're good with just doing their job, and they're not so good talking about it. They're like socially awkward, or some of them can be. So he's not that, though. He to me, because he shares a lot of his information, a lot of his knowledge about things. I attracted to that quick, because he on some level reminds me of my father, because Ed's a very tough man to talk to, because he calls you out on your nonsense really fast. And he reading on his site, and then getting to one of his tribes, reading on the site about the theory about the feelings that we're unwilling to feel, so the feelings that we don't like kind of run our lives. And I was like, what the heck does that mean? I don't even know what that means. And, at that time I first came into him, probably around 24, 25. So I was still pretty stupid at the time. And I didn't know what that meant. And then, started getting into more of his FAQ on his site, which is where people submit, their stories and write whatever they write into him. And he responds. And, half the time he's being a wise ass in his responses. And the other times he's being pretty helpful and explaining what the tribe is all about, what's the whole process, what's the whole intention of it, how is it aimed to help people out. And, at its core, it's really just to help people push through their issues to get to a right livelihood, which is basically, you do what you like to do, and you do it, you serve other people. And you maintain your health, and you get good at what your craft is. And when I started in one of his tribes, initially it was a little weird. It was a lot of guys. In our tribe, it was a lot of guys in the financial space, which is not always the case in other tribes. Some people aren't in finance at all, and there's a lot of guys talking about, and then, first talking about their feelings, and then, he has this process called the hot seat, where you get into, some real intense feeling that you have that you want to change. You want to change you want to change from a medicinal response to a proactive response. So in the case of trading, you get people that don't like to lose money, right? What are they? And so they medicate it by, in some cases not having, not looking at it. They don't open their statements, or they don't sell it out. If they're long a stock or something, and it starts to go against them, they don't sell it, so they don't have to feel the actual loss. They could just hold on and hope that it returns to a more profitable, position one day. So these are all non-proactive responses with dealing with the loss that is true. It's, it's happening, whether or not you like it or not. It's happening. So you can either deal with it responsibly, proactively, or you can medicate it by not feeling it. And this is what a lot of people do, in their lives outside of trading as well. Same thing when if they break up with a boyfriend or a girlfriend. What do they do? They don't go to the drawing board assessing their behaviors and, what did I do that really made this relationship tumble and end. They'll say, they blame other people. They'll go watch a movie. They'll console a friend, an enabler who tells them it's going to be all right. It's going to, it wasn't your fault. Or they'll go, on a worst case, they'll go, do drugs or drink alcohol or, indulge in some unhealthy food or something to make the feeling go away, and to, justify themselves and, what happened. It wasn't their fault and all things like that. So, that's what the tribe's all about, because it helps you in a group setting. Ed believes that a group setting is better than trying to do it yourself, or it may offer a better way to than going to a psychologist or psychiatrist or something, because you don't get to learn from the doctor doing it. In tribe, you get to see everyone work and everyone working on their own issues. So that he believes, is a better atmosphere to learn from, because you get to see other people doing it too. People get to learn and set examples for others, and that helped me eventually push through the fear of starting my own fund. I was scared. I didn't think I could do it. I mean, I knew I could do it, but I was afraid what my parents could think. Like I'm an only child, so I get a lot of questions and I get all the attention. So I was just nervous with dealing with that. My parents, they're slow and steady people that have been at the same type of job forever, and this is not something that they're used to. They don't know what starting your own business is like and the risks about that. They just think it's risky because it's you need to have a job. That's the way to go. So all these feelings that I had come up, the tribe helped me out, and learning the things from Ed, more on the psychological portion of the game, really helped me, eventually pull the trigger and deal with feelings that were previously standing in my way, deal with them proactively and take a more go-getter approach to it, rather than just sitting back and maybe they'll go away or distracting myself somehow. But and then like a side note to that, outside of trading, all these things help me in my life as well. And can't say enough about that, because my life in general changed after first being introduced to Ed's FAQ site and then getting into the tribe as well. A lot of people like to, Ed seems to have like a cult following, as far as like, he was the guy who, made, read Market Wizards, couple 100,000% over 10 to 15 years, whatever it was. He gets a lot of attention that way. But, for those traders out there that think that's really cool or whatever because he makes a lot of money, or he did or something, that's all great. But I'm telling you, I think there's more to learn from him on the psychological game side, because I don't know, making money is cool, but making money and having good relationships and having a stress-free life and living a life that is fulfilling is much cooler. A lot of guys out there have a lot of money who are just miserable dudes, and they have awful lives. So to those young guys, look, it's not all about the money, and it may be a weird thing, a trader saying that because the job is all about money, but or that's the only thing we make. We don't create anything else, but you can create a life you'd like, and work with people that you like, and serve them well, by getting your own issues straightened out, rather than just looking for the best system out there and emailing Ed and guys like him, like, oh, what's your system, or teach me the system so I can go become a big shot. That's, maybe when you're young, you think that's the way until you get into it and you start trading a system or trading a style. And then you learn that, oh, yeah, I don't just need a system. I need the whole psychological game, too. I need the discipline. I need all this, the clear thinking. I need all that to make any money.
For sure. And I mean, on that point, like that's a really good point you make about how it's not all about the money. But I mean, most of the guys who kind of say that have money. Do you think it's always easier for those who do have, a big bank to be able to say things like that? Like, do you think it's a bit challenging when you're younger and you're coming up? You don't necessarily have all that money, so you've got like a safety zone, or you know what I'm saying? Like it's a lot harder to think that way when you don't necessarily have any money. Money does seem very important. Would you agree with that? And
Yeah, and I would say, because I was in that position too. And looking back then, it's, you likely want to make money when you don't have any and it's likely at that point a medication for the feeling you don't like of being poor. And so you think, oh, I'll just make a lot of money and that feeling will go away. And then you find, a lot of people become, I'm not, those, maybe that drive to make a lot because you don't have a lot, really helps you, make a lot one day and become a successful businessman or trader or whatever. Great. But it's a very myopic, I think, short-term view of and I say it's not a well-rounded strategy to make money and then get all the other things you want in life too. People tend to fall into that. In this case, like, you're medicating that fear of, or medicating that feeling of being poor. I just want to make money. I'll do whatever I have to do to make money. That's why you hear about a lot of poor people growing up. They make a lot of money one day, because they're driven. They don't want to be poor ever again. And that doesn't mean that they're happy people necessarily. It may mean that they're good at their job. They're good at their craft or whatever. But you don't hear about the other things outside of their job and work success, because that's all business people care about. You don't hear about their personal lives. They're not going to we don't hear about Warren Buffett's personal life really, or like other successes personal life. So we don't get to see that side, and maybe it's a train wreck. Maybe it's not, maybe it's not what you would want for yourself. So, looking at just one piece of a person's life, I don't think is enough information for people to to learn from and then incorporate into their own structure, into their own vision of what they want their lives to be. If you want to just learn one skill and trade all other things for that one skill, then fine. But if you want to have good relationships, you want to be fit, you want to be healthy, you want to live a long time, and you want to have some money, and you want to have a good family and friends and all this stuff, and have a life of abundance and a vision, a well-rounded vision for what you want, then you may need to learn how to make money there. But maybe becoming a hotshot trader or a hotshot this or that works against a well-rounded view for yourself. It may not work like that for another person, but maybe for you, you need to, take other information into account and not just go for it all and try to be just the big shot trader, because you may be that one day, but you also might be, a jerk. You also might have a couple divorces. You also might, have a couple of health issues. And I think Ed would be the first one to admit that. Don't forget he's had 2 divorces. And probably a lot of drama during his great trading run that he may not be too proud about. It's, what I'm saying? So, the money's cool, performance is cool, great, but there's other things that matter. And, I think Ed can, going to his site and, maybe joining one of his tribes, learning about that process can really help people see or come to that. I'm not saying this view is correct, but it may just open themselves up to, maybe there's other ways to think about it. That's all. I'm not trying to push a way or a system on anybody or a way of thinking on anybody, but that's what happened to me, because I thought it was all about the money. I thought I was going to have it made, and then Bear went down, and then and then half of Wall Street went down. So, there's other things that become important. And I learned that for myself during those crashes.
Yeah, I like how you answered that. You touched on a lot of great points there.
Yeah, and I also tell a story about a guy who I work with at Bear, and I remember standing next to him a day or two after Bear, was bought by JP, and this is a guy who's been there for 20, 30 years, and nice guy. He's a regular guy. He just works on Wall Street. He didn't know anything. He didn't have any inside info. He didn't. He just made a little bit more money than the average guy, but he was still really nice. And we were standing on the trading floor, and he was looking at all the screens. This is when people were just half the people there who used to be there weren't there. And it was a total mess. It was like the last day of school, there's nothing going on. Everyone's just kind of talking and not doing anything. And he was looking at his screens, all the flashing lights, because at that time the markets were still wild, going, high vol and everything. But at Bear, there was no business being done. So we were all just kind of watching it. And this is after the guy knows that he probably lost a ton of his retirement money. And he's like, Mike, you see all this? And he's pointing to his screens, all the flashing lights, all the Bloombergs, all that. And I said, yeah. He said, all this means nothing. I'm going to a wake tonight for one of my daughter's or son's classmates who killed themselves because they were getting bullied at school. These kids are 10 years old, 8 to 10 or something very young. And that was another hammer over the head moment. Yeah, you're right. This is not. I don't want just the money here. Because focusing on that, you miss out on some of the more important issues of, in this case, kids. How important is it if your kid just died? Really, is it important? I mean, do you really need to have that big trade? You need to make that big no, because you have other things to worry about. And I feel that really that helped me one even further push to get the hell out of the workforce in this Wall Street, but also helped me to really think about more when I did pull the trigger. What kind of business do I want? What kind of life do I want? Outside of just trading my trend following system, that trend following system is just one little piece, it just helps deliver some profits to my investors. That's it, but, incorporating some of the other more qualitative, aspects of life, into my picture, my life's vision picture, that moment with that guy, really helped me at least be open to thinking about stuff like that. I didn't, starting the money hungry grip started to loosen a bit after that conversation.
Yeah. Well, that's really deep. Thank you for sharing that with us.
Yeah, it was pretty gloomy, but I mean, like they're real things.
Yeah. Well, I mean that helps put things into perspective, doesn't it? And look at the bigger picture. Now, let's turn this discussion more towards your actual trading methodology. So, I'd like to ask you, could you describe to us how do you actually view the markets, and just share an overview of your particular trading style? So, you've already mentioned it's trend following, but let's get into the nuts and bolts of it. So, what actually is trend following? How do you view the markets, and just give us a bit of an overview of your approach.
Sure. Yeah. So the basic ABCs of it. If I break it down into a diversified, systematic, long-term trend following, I'll break down each like little sections. I feel like going like that is easy. It helps people follow along easier than it is just me spewing. I'm going left, right, back, forward. That people can't keep up. But anyway, so diversified. I mean, I take it from the. I'm on the stance that I want to be able to trade any trends out there. I want to be able to trade and profit from any moves in the world. Really doesn't matter. I'm not restricting myself to just stocks, which is the traditional approach, like the stocks and bonds and the real estate. I want to be able to trade currency trends. I want to be able to trade commodities and other foreign markets, foreign stocks, foreign interest rates as well, because evidence shows, you look back and do some research, that things outside of stocks and bonds move quite a bit. And why would I just want to sit in one spot and just wait for all the movement to come in those areas? Why not I branch out a bit and maybe open myself up to being able to profit from some moves like that? And what's happened over the past year has been a good example that currency trends have been great since last summer, and energy as well. And then most recently, metals started to break down again. So if you're a traditional buy and holder, you just don't get those moves. Maybe you can apply your style to that, to those other markets, and do okay. But in the meantime, there's some pockets of time where you can't, because you're not open to them. So I like to be open to a lot of different things. To make a baseball analogy, if you're a hitter, you don't just want to be able to hit a fastball down the middle. You need to be able to hit other pitches in other locations, and if you can't play, because you're not good enough. So you need to be open to hitting different trends and different markets going different ways, and that's what kind of I feel. I like doing that because I don't want to be a stock picker. I don't want to be a picker in one area and try to trade every little wiggle in one or two markets. I want to be in a lot of different things and not really have an expertise in any. I just kind of want to just float along when the movement comes in different areas, and just set my sails with them. So I get okay. So moving from the diversified to the I'll go to the long term first. So I don't want to be trading. I'm not a day trader. I don't really like to look at markets all that much during the day. Again, it's like quality of life. I don't want to be sitting in front of a computer all day long. I like to do other things. I like to get outside. I like to read and do things with my fiance, my friends, and family that don't require me to be sitting in front of a computer looking at my trading software or the quotes all day long. Like, I wanted a system that I didn't need to do that. And so I focus on long term. I focus on trading trends that my system on average, its average holding period is about 7-8 months long. So that's my average position that I'm holding. So I don't really need to look at it every 5 minutes. I don't need to look at it every 30 seconds. So I can I can update it daily, check it periodically, throughout the day if I'm around, but not an everyday thing. And, I want to be there for the biggest moves too. The biggest moves exist on longer time frames, and that's what I like to be. I like to hit home runs, and I don't like to be a singles hitter where I'm trying to get wiggles every day like day traders do. They try to get a lot of little moves, during the day or during the week. I forgive that. I say you can have those moves. I'm not trying to catch those. I'm just going to try to be there for the big sucker that plays out over X months or years or weeks or something. That's just my style. And again, there's no right or wrong. I feel that my style works better for me, but it's not always the case with everybody. And I guess, all right, so we have the diversified, we have the long-term, we have the systematic. So the systematic, I just create a method, a rules, a set of rules that decide, which markets to select, which markets I'm going to look at, and then which markets I'm going to trade, and then which market, and then position sizing rules. So how big and how small am I going to be in each market that I observe, and then when I'm going to get in and out. What kind of methodology. I kind of already said that I'm a long-term method guy, so in that case, my entries and exits are fairly loose. It takes more of a move for me to get in and out than it would for like a short-term guy. He's more tight. His entries and exits are tighter with the movement than I am. To make it, I guess, an example, like let's say I say I'm like a breakout trader. I use a 200-day look back. So if the market makes a 200-day high, I'll get in. Versus a shorter term guy, which is it wouldn't work. I wouldn't be able to follow a shorter term system that well, but just because my psychology doesn't really fit with it. But like a shorter term guy may go enter market on a 20-day high, so he's getting in and out much quicker. I like to be a little bit longer.
Well, let me ask you about the systematic side of things, because you started out as an accountant, then you became an analyst on the trading desk. At what point did you learn to start coding, or did you code, or did you bring in outside help? Like, how did you actually develop your system once you had an idea and some rules that you thought might be valid and have a edge that's worthwhile trading? How did you actually turn this into a functioning system that is essentially automated these days?
I old-fashioned way, I started with some pen and paper, and then I got into Excel. And I still do a lot of the majority of my systems in Excel because I like to see, like Excel allows you to go under the hood and kind of see what's going on versus a software which kind of just pumps out results that you don't really see what's happening. So I called a couple guys to help me, who I used to work with, who are more advanced with coding, and they kind of show me the ropes with some like Python software and C# and things like that. And that's all good as far as like testing goes, because you can be efficient with running a lot of tests fast. With Excel it's kind of slower because you got to it's just a little more detailed and not as not as advanced as some of the other softwares. But anyway, I called a couple traders who I looked up to, who Covell wrote about in his books, and then they kind of told me like, look, we can code, but it's not really like a necessary skill to have. You need to have some sort of like basic, you can do everything in basic Excel. That's kind of why I started in Excel. So you can start there, and you can always stay there if you want. You know, you don't have to go to the software route. So that's what I did. I got into Excel, just kind of started making it up as I went along to learn it, and didn't really have a guy there, you know, sitting next to me while I built it up. And I designed like a risk sheet. So I had like a portfolio sheet, which is where it had all my positions. It had my position size, has where I got in, where my stop is, what the current price is, and how much money I have at risk, what's my P&L, and all those things that tied back into other sheets that I had for each market, which each market was just had the data. Then I had my position sizing sheet, like how big of a position am I going to take if I get a signal, all that. And so I updated that stuff every day. I had a new, every day go into the market sheet that I had, and right now I have 40 markets, so I have like 40 different sheets for each market, and so I update the data every day, and then I see what my rules tell me to do. How do they change? Should I take a bigger position today if I get a signal? What's the new stop orders? What's the new buy stop? What's the new sell stop? When am I getting in? When am I getting out? Type of thing. So I started probably doing that sometime in 2010, 2009, 2010, and then just kind of made changes and advances along the way as I've gotten better at building these things, and I guess more comfortable with just how to do it. But yeah, there was really no fancy way. And you could probably hire someone to do something today or help you, but I didn't.
Okay, so I've just got a question around that. You obviously mentioned Excel there quite a bit. What sort of data were you actually putting into Excel? Was it like calculating anything, or had you programmed it to output certain data, or was it just you were just using it as a spreadsheeting tool to keep track of your positions and your trades and that type of thing, or was there something?
Now everything is coded and linked together. So I have a data software that inputs into the market sheets every day, and then from those sheets they spit out the new day's buy and sell signals if they are changed. Like a lot of times, since I'm so long term, they're not different at all. The new position size. So yeah, I don't just have a summary sheet of like what my positions are, so I could see it all in one spot. That kind of auto populates from other sheets and things. So it's a whole big linked web of things. But I think you could start with a simple sheet of, if you do things by hand. If you're a non-systematic trader, you just kind of want to make trades, based on your gut or something, or do it another way. You can have a sheet that kind of organizes things for you, like, so you can see what it is you actually have on the books, what you have, that we don't have to remember everything, and that's kind of what helped me in the beginning, because if you want to be a diversified trader and trade a lot of different things, you need to organize the stuff, because there's no possible way you can memorize and remember everything about where every stop is and what every position size is and what's the proper risk management and position size to take in every market. You can't possibly remember all these things. So and maybe you can, maybe you're smarter than me, but anyway, I like to keep it organized, and I like to keep it in front of me, so I don't have to remember it all, because I have other things to think about too, other than just trading.
Of course, very important to be organized, for sure. It's a big one.
Yep, that's what I feel this has helped me to do, organize, and I feel that's what a lot of good traders in general do. Especially the systematic guys, because they're computer nerds. They don't want to have uh, things in their books that they're not accounting for, or that they run the risk of not remembering, or maybe some of the traders of old that do it like that, where they're kind of just more on the off the cuff. They kind of see their statement, and then they make other decisions. They kind of just on the fly of changing things, and not really setting to a disciplined set of rules that hold them accountable to do what the rules say, and to organize them, and to face them every day. Some people don't want to face their statement or their summary of what they hold the positions are, because they don't. Again, going back to the Ed Sakota stuff, people don't want to feel the feeling of being bound by the rules that they set for themselves. They kind of want to do what they want to do, sometimes, and they don't want to obey the rules. Like dieting, same thing. People just go off the rails. So those things are, they won't appeal to everybody, but I feel that they really help me to, again, be organized and know what I'm doing. If I don't have this setup, or something set up that tells me what to do, when to do it, and how much position to take, I feel that I don't know what I'm doing, and I'm going to freak out, because I don't like not knowing what I'm doing. I need to write things down, and I need to be organized and everything. So that's why I go with this approach than maybe some others.
Yeah, I think that's a fair point too.